It's Elaine. This is episode 519 of the Orange Pill Investor. A little busy today, so I'm not even going to mess around with the music. Um, did a little shopping, getting ready for Thanksgiving. So still, still got to go to the gym. Skipped yesterday, so can't skip 2 days. And I'll just talk quickly about. Oh damn! I didn't even show. Usually start with this. It sucks that I have to scroll out to 5 years to find the green chart. But I want to talk quickly about rational FUD. And, the X is inundated with irrational FUD, Ponzi, sailors trying to steal your Bitcoin, just tons and tons of uh, kind of silly stuff. Uh, Adrian has still been, debunking the ATM affecting, being the main driver in scuttling the share price. But everybody's got a boogeyman that they want to attack. But I had a at least reasonable discussion with a couple of peeps on over the weekend, and it was kind of funny because all I meant to do was post a picture of my breakfast because I'm on some carnivore shit, and I've been cheating a little bit here and there, and I just kind of assumed Thanksgiving is going to be a train wreck. We'll see. We actually didn't get any pumpkin pie or sweet potato pie or cheesecake or any of that shit. Still got some leftover birthday cake from a couple of days ago, but I really didn't even eat that. It may sound gross, but I actually I had a small taste, but all I did was chew it up and spit it out so that I didn't actually have to consume the sugar. And so, really wasn't expecting to have a long drawn out discussion on strategy, but log jumped in and just being funny about little overlap between Bitcoiners and meat eaters. And there's some other folks in here as well, but I was asking, basically my thesis really hasn't changed, which is Bitcoin is disrupting and it's the clear winner. Strategies built on Bitcoin, it is disrupting and it's the clear winner. So that's my entire thesis, really, from no technical analysis, knowing nothing else. That's kind of basically it. But my question was, because any person who thinks that they're discussing something in an open-minded way should be able to identify their falsification criteria. I didn't come right out and say that this is what my falsification criteria is. Hopefully that's understood here. But that, regardless, that's the point of this question is, if someone were to share some math that demonstrated that strategy, even trading at 1x MNAV and using leverage, which we're now calling amplification because they're dumping the convertible bonds and adding preferreds, which is technically not leverage. I kind of don't really agree with it. Like, it's creating an obligation, which seems like what debt is, but whatever. The definitions are slightly different. But if you're using leverage, even trading at 1x MNAV, you should outperform Bitcoin. So that's kind of like my challenge. Like, if somebody can demonstrate that I can buy strategy and it's going to be trading at 1x MNAV in the future, but it's amplified, meaning they're borrowing or pseudo borrowing with the prefs, and basically accumulating more Bitcoin than you can with your current fiat stack, then won't you end up with a higher share price and outperform Bitcoin. That's my challenge. And if someone can demonstrate that, I would have to concede that my thesis is invalid. And so basically I just asked for some math. And LP responded, the basic math is that once strategy trades above its net asset value, the downside from any premium compression overwhelms the leverage-driven upside. Buying or holding at a premium now carries far more risk than potential reward. So this is not exactly what I asked for. This is a conclusion based on the math, and I was asking for the math. I never really got the specific answer to this question, but I did get some arguments that were at least data-driven, model-driven. They were at least worthy of a look. And one of them was from Tanhev here. And I never really got the, well, he's got a couple of different posts here, and I think I conflated the two. So I got a little bit confused about where he was actually going with this. But maybe the interest, I thought it was, so this frickin' thread went in so many different directions. Damn, I was actually looking for the one where he's got the rolling. Here we go. So he's using a back test for the rolling 4-year CAGR instead of just like when you go to a retirement website for like FIRE, Financial Independence, Retire Early, and you try to put in how much Bitcoin you need to retire. You're gonna model it out with what you think Bitcoin's CAGR will be over the next 20 years. And it looks like, at least since 2015 is as far back as this chart goes, the rolling 4-year CAGR is showing a certain decrease. And, depending on peak to trough, you're going to get some shitty CAGRs here, but then you're going to get some nice juicy ones, up here. And I had like Grok double check it, and it does seem like this is reasonably accurate. And so I think this is where we currently are. This is like end of 2025, beginning of about to be 2026. I can't see exactly where this lines up, but we're like at a 12% rolling CAGR. And so I don't really think it's fair the way that this model was exactly done, because it's modeling it out from here, whereas, over a 4-year period, back to 2021, the CAGR is between 125 freaking percent and 7. So, splitting the difference there, it's pretty good. And so, so it is true technically that, all of this, if you're paying the prefs and you are just starting with a tiny amount, that, yeah, you can go broke. But so these things are fun to look at. They're interesting. They should be considered. They should be debated or whatever. So, things like this, I don't mind. They're much more reasonable concerns than some of the unreasonable FUD stuff that we kind of just dismiss, or it's been explained away multiple times. I think so. Me and Log had tons and tons of back and forth, but there was one that's worth talking about. And he said that this was a, I don't know, canary in the coal mine thing. I think it was once he saw the prefs, he concluded that instead of the convertible bonds, which has like an out of the money, like maybe out of the 40% out of the money, strike was a magnet for the stock price. Now, his concern was that, okay, that magnet is no longer there. And what's the magnet now? And his conclusion was that the magnet was 1x MNAV. And while I don't necessarily disagree with that, if we ignore the business and we ignore any innovation that they might be able to come up with between now and whenever it matters, and some people are very unwilling to give a company any credit for what could become in the future, but it still has to be part of. And I don't even do models or price targets, but it should be included in a price target, because otherwise, I would argue back with TradFi guys about whether Tesla was a car company or an AI company or whatnot. And just a couple of years ago, if you modeled out Tesla's value just based on its EV sales, because all they are is a car company, you'd be missing out on robo-taxis and Optimus. And whether you think that there's a 1% chance that those things print money or 10% chance or whatever, it's worth something. It's worth some amount of value. And so, because Strategy has been so innovative and they're the leader in the Bitcoin space, I'm going to give them a little bit of a premium, and whether that's expressed in MNAV or what, I'm giving them at least something over 1x MNAV as a premium for being a leader in the space, executing the Bitcoin accumulation strategy at least better or in a more daring and innovative way than anyone else. Everybody else is basically playing follow the leader, and they, basically need a telescope to see second place in a rear view. So mathematically, while I do agree that in theory, Strategy trends towards 1x MNAV, with amplification, it should actually be like MNAV plus something. So it shouldn't ever be like exactly 1. The asymptote would be somewhere above 1, and I don't know exactly what that is, 1.1, 1.2, 1 point something. And then, of course, there are going to be market fluctuations where, it's traded below MNAV in the past, and then it was able to trade well above 1 in the future. So I don't see any reason to believe why there can't be pendulum swings and like, let's just say it's trending to 1.1, like maybe it's going to swing between 0.9 and 1.3. But that I might even actually be making logs point for him. And if that's the case, then you should always be trimming a position above whatever you think the fair MNAV is, and you should and then wait to build a position below whatever you think a reasonable MNAV is. But if I kick the ball back into my court, then I'm going to say, then you don't actually have an issue with the company. You only have an issue with its current trading price and about whether it's undervalued or overvalued. And I think sometimes there's a tendency to criticize the company for doing something wrong. But if you're admitting that you're willing to buy that stock at a lower price, then you can't have any problems with their fundamentals. You just have a problem with the current price. God, where was I going with that? I think I'm missing something, but if I remember it, I'll come back to it. Oh, damn, he mentioned something. Let's see, the magnet for the OTM, the magnet for the MNAV. Anyway, if it comes to me, I'll bring it up. But that's just a quick overview of our back and forth. But I think he did have one other good point, and I'm not going to be able to find it because there's just so many We discussed Kelly criterion a little bit. Let me see if there's more replies here. And it was a fun back and forth, right? That there's quite a bit of angry FUD that's not pleasant to engage with. So I appreciated this conversation, and yeah, I think it is reasonable to treat Bitcoin treasury companies as a trade. Like Bitcoin is a forever hold. Oh, I think that's where I was going with it. So the other good point that, and it's not this comment exactly, but he refined this point and said something about if your entry point is significantly above MNAV and then MNAV contracts, well, now you're digging yourself out of a hole. And I think that's a pretty accurate statement. But, if you buy at 1.5, you don't really know if it's on its way to 1.1 or 2. And I think it's reasonable to assume over at least a 4 or 5 year period that regardless of your entry point, you're probably going to outperform Bitcoin. But there can be some bear markets, or there can be some irrational selling off of these things, or hedge funds decide to target strategy with a short position followed by some strategic FUD and lawsuits and all kinds of shenanigans. But if you can diamond hands through 4 or 5 years, then it probably doesn't matter. But the point still stands, is that anytime you enter a position and then it draws down whatever 30 to 50%, it's very hard to get back up to that position. So you might be hodling for much longer than you anticipated. The math on that is like losses are much harder to recover from than it is to lose gains. So for example, if your position goes down 50%, if it goes up 50%, you're still down 25% from your original position. If you lose 50%, in order to break even, it has to actually go up 100% now from its new price. So, trying not to lose money is an extremely important aspect of trading, and it was appropriate for Log to point that out. So I think that was just a couple of good points that he made. And clearly the decision to enter into a bunch of long calls in November was not consistent with a 4 or 5 year outlook. And so almost all of my long call positions in 2025, were, I don't know, probably down 90%. I funded most of them with profits from taking covered calls. So that part didn't really hurt me that bad. It was just kind of like a break even. However, every time the price would drop another 50 to $100, I was adding poor man's covered calls, and actually those probably took me down significantly. And I would like to be able to call the bottom and say, oh yeah, it's up from here, because we're back down to the triple top in 2024. So, there should be a good amount of support at this level, but there's no reason why we can't draw down 75% from all-time highs, which would be like 75% off of 500, which would be half to 250, another half back to 125. So that would suck ass, but that would be like the next support level, right? We got support at 175. If 175 doesn't hold, it's like 115, 125 season again, unfortunately. And the year's not quite over, but it's pretty clear to me that I can already add to my list of mistakes was assuming not just a slight direction on the stock, but assuming that it was going to be more like looking like this than like this. 2026 could be better, or it could be worse and more of the same. Almost like most of the catalysts for strategy itself, that are strategy only, seem to be gone. The last one that I had some hopes to cling to was S&P 500 inclusion, but that even seems off the table with the S&P ratings that they got. Eventually, they'll get in. So, next year, the year after, maybe it takes another cycle for them to prove that the prefs work and that they can handle this type of drawdown. But of course, strategy will be buoyed by a pump in Bitcoin. But Bitcoin can do whatever the hell it wants on its own time as well. So Bitcoin don't give a fuck about my bags or anyone else's bags. So unfortunately, it's basically up to Bitcoin whether it wants to pump, or else the market as the prefs start to build liquidity, if they're able to continue to purchase Bitcoin even in this type of environment. I think Stretch is still not back up to par. Yeah, it's climbing its way back. And I'm guessing these crashes will become less volatile and less frequent over time as the product matures and it becomes to be trusted. Oh, and you know what? Let me go back to this. So I didn't. Okay, so I either didn't fully understand what Tanhef was trying to say here, or I just didn't like it. But there is one thing that I don't even know if that was the point that he was trying to make. But regardless, there's a how does Jeff Booth describe it? The cost of things trend towards the marginal cost of production. And so right now, there's Bitcoin's CAGR, which is whatever, somewhere between 30 and 50%. And there's the price of the prefs, which is like 10%. But, they could crawl up to 15% if we have to keep pumping up the interest rate in order to keep this at 100. And entrepreneurs, and you could call one of those Strive, for example, not financial advice, and I don't know how many times I have to say that I'm an independent voice. I did receive some payment from them for all the work that I did on True North over the past year, but we don't have like a formal agreement. And until, maybe in 2026, we'll have some kind of contractors agreement. But until that happens, I'm basically working for free. I guess I can put volunteer on my resume. But Strive saw what strategy was doing, and they're like, oh yeah, there's a profit margin to attack here. Whatever the difference is between the interest rates on the prefs and Bitcoin's CAGR, that's the profit margin. And there will be additional entrepreneurs in the space to attack it. And eventually that profit margin will go to trend to zero. Well, not exactly zero, but the marginal cost of production. So whatever it costs to acquire Bitcoin at whatever Bitcoin's CAGR is, that seems to be like what the interest rate on the prefs will trend to, or else the CAGR on Bitcoin will decrease until there's a certain amount where it really no longer makes sense to try to attack because the profit margins are all gone. I think the profit margins on most industrial cars is like under 4%. Like to get 4% profit margins from like Toyota with pumping out millions of cars and quantities of scale, like they can still eke out barely a few percent, whereas Tesla came in and they were making like 20% margins, I believe, which is just one of the reasons why they're all going out of business, and Tesla is going to be the one that puts them out of business. But eventually, and I don't know if this takes 10 years, 20 years, 50 years, or whatever, but at some point, Bitcoin's CAGR will decrease, maybe it's to 20%. And then, if strategy's paying 15% on prefs, now they're only capturing a 5% spread. So eventually, it's going to be more and more difficult to stack sats using this method, but it should always be, stackable. And so even just stacking a few 100,000 sats when Bitcoin is freaking 10 million a coin is still going to be a decent haul. So eventually this becomes less accretive, but for now, it's just ramping up. Like, this trade is not over, for God's sake, in my opinion. Can the price get worse before it gets better? Of course, always, unfortunately. But over time, this should compound at, I'm guessing, at least for several decades before Bitcoin's CAGR, drops to 20%. Now, going by 10 hefts, like rolling 4-year CAGR, I don't know if there's insights in there or not. I really have to look at it more. Probably need somebody to hold my hand to understand. I think I kind of missed the point of whatever point he was trying to make there, but he did seem to be correct that, just looking at it that way is just another way of looking at Bitcoin's decreasing CAGR, which I think everyone acknowledges is true, right? The 1,000x returns of 2015 are over. All right, let's check chats and then jump into it. And FEC logs in the chat. Let's see if he's going to correct anything that I have been saying. If I said anything stupid. Let's see. Agree about strategies optionality. I will rebuy soon. Hoping for below MNAV. It is absolutely a good idea, in my opinion, to hold a small to medium forever bag because of that optionality. They have 650,000 Bitcoin and counting. They are going to win. I was and am just bearish on holding it at a premium when everything in the current structure was telling me it was going to 1 or worse. Yeah, and you were either spot on, or, and I don't want to make this sound insulting, but it is possible to be accidentally right as well. And so, strategy's price could have come down for a number of reasons that didn't have to do with 1x MNAV necessarily being a magnet. But it's also kind of interesting how every unique investor has, a unique set of experiences. So whatever your, strengths are in the market, maybe that was something that just hit you and immediately became like a no-brainer, like, holy shit, obviously this is going to trend back to, is going to revert back to 1 and kind of like pendulum swing around 1 as a magnet. But at the same time, if a half a dozen other variables came into play, I don't see that 1x MNAV at these prices was but maybe that's just cope on my part, that, thinking that we could be at like $1,000 a share if Bitcoin was, if ands and buts, but if Bitcoin was trading at 175 or 200, like, we wouldn't be having this discussion. But then, to concede your point, you can also be accidentally right. And so you could have been right about the 1x MNAV magnet. And if Bitcoin pumped to 444, like everybody had their fingers crossed hoping was going to happen, that could have masked strategy going up, but was actually trending towards 1x MNAV. And so in that case, you would have been right, but everyone would have said you were wrong, even though only because Bitcoin pumped. So maybe Bitcoin, maybe you were right, and Bitcoin pumping, or excuse me, collapsing kind of allowed that phenomenon to prove itself or whatever. But the reason I even brought that up is not to dismiss your being right or to try to resist that point. But it's very possible in the stock market to make a logical, good trade and lose money. It's also possible to be a fucking idiot and make some money. Like the guy that I talked to in the sauna, I'm like, sometimes I try to orange pill people and see if they're into Bitcoin or whatever. And the guy's like, oh yeah, I'm into Bitcoin. He's like, I made like 50 grand on XRP. And I'm like, okay, fuck, here we go. So the guy made a bunch of money, but for the wrong reason. Like he thought you can just buy these altcoins and make money. And he thinks there's something fantastic about Ripple, apparently. And I'm never going to be able to convince this guy that he accidentally made money. Like, he absolutely did the wrong thing and made money. So you can do the right thing and lose money. You can do the wrong thing and make money. And so that's just kind of the point. You need to evaluate your trade history through that lens, and always be willing to admit that, like, the price of the stock going up does not, or even your portfolio does not mean that you did the right thing. And, if you, like, I lost a bunch of money in 2025. If that happens in 2026 and 2027 and 2028, and the gains don't outweigh the losses, then I have to admit that my trades are bad. My entire philosophy is wrong. I think it was Tom from Tasty Trade. He told some kind of story. I think the very first time that he sold iron condors, he lost a bunch of money. And he said that was the best thing that ever happened to him, because it taught him to, like, not assume that there's just free money heading your way. And he felt like if he had made money on those iron condors, then he would have continued to make the mistakes with that trade, assuming that they'll just print money forever. So that's the only caveat that I want to throw out there, is that if you make a directional bet and win, it's not necessarily because you knew something, but it could be. So I definitely want to give you your props for getting a hell of a lot better of an exit point than I got. It sounds like you booked some profits, and I gave a whole bunch of money back to the casino. So I definitely have to give you your flowers on that point. But and now that, that I'm down, it's a lot harder to claw your way back up. So I do have to agree with you that it definitely makes sense to trim positions when you win these things, especially in the stock market. You can hodl Bitcoin forever, but, like, having some kind of active rebalancing, if you're going to be an active trader, is necessary. So I think I could absolutely learn a thing or two from your example in that case log. Let's see. The point you're looking for might be in the post I made on my page. Oh, that's right. You quoted it. Yeah, you quoted it, and then we ended up, that thread ended up yeah, here, maybe it's here. Yeah, this was the point that I was trying to remind myself of. So it's that any contraction from a price level above one creates far more downside than the leverage from the press can make up for. I think time overcomes but this is an absolutely valid point, that if you enter in at 1.5 and we drop to 1.1 and you stay at 1.1, now you have to wait 2, 3, 4, 5 years for the next, you have to like diamond hands through the bear market, waiting for the amplification to amplify strategy's MNAV up to the point where the future 1x MNAV is greater than the previous cycle's 1.5 MNAV. So yeah, this was what I was trying to remember. Oh, and you actually shared it for me. The weird thing about Restream is, though, so I can share this status, but I actually can't click it. If I click it, it doesn't take me to that thing. It only highlights it for the chat. Oh, and you sent it through the DM. Damn, you're really just making this easy for me. Let's see. Voyager says Grok gives an estimated probability of 65% for strategy includes in the S&P 500 in December 2025. No shit. I think Grok is high. Odds on my 450 March expiring worthless. They used to be December 380s. March 450s. You got 4 months. Yeah, I'm not optimistic. I am bearish for different fundamental reasons on Bitcoin in the short term. I think the Knots Core war is causing the network to kind of wait and see what's going to happen. Are they going to be able to execute an emergency fork in the event that CSAM gets on the blockchain? Is there going to be enough consensus to adopt the either the user activated soft fork or the miner activated soft fork no later than September of 2026? The miner activated soft fork, I believe, could be adopted early if there's consensus with the miners. I think that's best case, but that's probably not going to happen for several months. So I know people are talking about the fucking parabolic move. This is the bottom. It's about to go nuclear. And I am optimistic that Bitcoin, this will be a self-healing event for Bitcoin. Like, I think it survives no matter what. And to be completely honest, even if we get the worst possible scenario of a black swan where like CCM doesn't make it onto the chain like in an obvious way with a giant ass 100,000 byte image or file, I know a lot of Bitcoin purists don't like to talk about it, but I'd be willing to hard fork that fucking thing right off the chain. And I know it's supposed to be an immutable ledger, but how do I say this? I think if humanity is willing to willing to store that kind of image, is willing to, like, I don't know, taint your soul for money, to preserve the money, then I don't think we deserve the money. And we can just go back to fucking settling this shit with war and whatnot. I'm willing to die on that hill. So sorry to pour water on the live stream, but I would be more than happy to be proven wrong. Like maybe this stuff gets resolved faster, but I think the network is just waiting, is kind of holding its breath and waiting for Bitcoin to heal itself of the malware that is Core V30. And while we're at it, we might as well just reverse all the damage that was done by SegWit and Taproot and regulate images at the consensus layer. So I'm hoping that happens, but I don't think the network is ready to admit that we win this battle for now. So sorry, sir. I'm not optimistic. Lux says, yes, what you just said is true, and why I held onto my shares and leaps for a while. I thought MNAV would go to 1, but I also thought Bitcoin would go up and smooth the pain. Yeah. Yeah, so we agree on those points. All right. That is enough of that. I wanted to cover this yesterday, but I was like, I already had so much to talk about. I can't make these live streams 2.5 fucking hours. So I think I might have a couple of little things to tweak here. Again, I could ignore all of these companies that I bought so that I can exert shareholder pressure on publicly traded companies. A little bit of a teaser. We may do a special strategy, or excuse me, a True North episode covering the core knots BIP 444 reduced data temporary soft fork deal from a number of different angles. But one thing that people can do is once you own a share of these companies, and even the expensive ones, I wonder if you could do it. I needed to ask Grok. Let's just ask Grok. Can shareholders with fractional shares sue publicly traded companies for negligence? Think faster. Yeah, so the guy who sold Tesla only had like 9 shares. So apparently it doesn't even matter. You could. Now I know there's other rules, like you can't submit a proposal for strategy shareholder meeting unless I think you have to have like $2,000 worth of $2,000 worth of a position. But apparently, let's see, tiny positions are rarely economically viable for individual lawsuits because of legal fees. But you know what? I'm sure, you know what? Can you help me file for free? Let's see. Okay, so if I want to file a lawsuit, let's see, join an existing lawsuit, check if you're already, okay. File a FINRA arbitration claim. Okay, that cost me $50. Let's see, small claims court, 30 to 200, submit a claim in an existing SEC. Okay, so it sounds like anybody can submit a lawsuit for pretty cheap. Okay, yeah. So this will be fun. So anyway, I bought some Cantor, some Donald J. Trump, some Hut, some Riot, some bullshit, some whatever this is. Already owned a bunch of Tesla and Strategy, of course, and I own a little bit of Strive, probably enough to be able to sue them. That would be uncomfortable to be suing the company that you whose podcast you are attend and participate in. But anyway, Um, shareholders have some tools that they can use, right? So they can email the company and complain and say, hey, what custodians are you using? Is your custodians safeguarding my Bitcoin with Core V30, which I equate to malware? Um, and if you fuck around and find out, you can end up, getting sued. So not necessarily threatening to sue, but also just asserting all of my shareholder rights, because publicly traded companies are extended exorbitant privileges, right? They're incorporated, so they're quasi extensions of the federal government, and they're allowed to, like, print shares and sell them ATM, which is it's really no different than counterfeiting money, but they're allowed to do it. And so shareholders also have some government protections. So, we can sue if they don't safeguard that precious Bitcoin that they told us was going up forever, Laura. So, that's what this is about. That's why I have a bunch of bullshit positions here. This cost me what? 25, 65, 70, 80, 120, 130. Yeah, this cost me $130 to stack 1, 2, 3, 4, 5, 6 companies that I think are in the top 10 of this chart, top 100. I already own Strategy. I didn't really even want to hold Mara because I think it's a shit coin. But at the same time, Mara and Naka would be the most fun to sue, I think. But anyway, I just went ahead and picked up a handful of these just in case I need to jump in on a class action lawsuit, or at least urge companies to pay attention to this issue. All right, Tesla, this weekly, not quite half of the week is over, and it's less than half of its value. So could I or should I roll the strikes down? Maybe, oh God, that's only going to give me like a $50 credit to the expected move. Yeah, it's not worth my time. I don't have to tweak these damn things every day, only if it's pretty significant. Like, these are probably worth rolling down. They're worth, what, 50? And if I roll to the expected move, yeah, I can more than double the credit. So I'm just going to do that. Chip away at my margin use a little bit. Does that introduce a risk that we rally way over 180? Sure. But a lot of people take off on Friday. I would assume the liquidity is not going to be very good. So, I mean, technically, this could go either way. This could drop to 160 on Friday, or maybe pump back up to 200. I really have no idea. This one, so this has already dropped 75% in 8 days from what I sold it for. So I'd really like to roll this out, but January 9th is still not available. I already checked, so I can't roll to 119. So I guess I could go to 52. If I do that, I got to sell at least the 230. What's that going to give me? $300 credit? Why not? Okay. This one's not quite ready to roll. So I think I'll chill out on that one. This one is ready. But again, I'm going to have to roll out to 52. Sorry. And at least the 250, 245, 250. $200 credit. Yeah, that's worth it. There's only 145 bucks left. So I can double my I can double the premium I'm collecting. So not a lot. Couple little tweaks, and now I have to go and regroup. This is kind of annoying. So this one plus this one. And ungroup, group, PMCC 2. All right, that's everything. Hey, what's up, Buffalo? All right, the IRA. Got my cipher. Price is holding strong, so nothing to do here. Tesla's price is going up, so this is actually the covered calls that would actually cost me more to close it now than when I sold it for, so nothing to do but hodl there. CLSK, yeah, sold it for this. It's now worth this. So these may actually get called away. That's possible. And these are safe for now. Not quite ready to roll, so I think I'll just hang tight on these. Ugh. Annoying. So 250 plus 10. I can't roll these below 260. So if I go to here, 175 credit, yeah, I might as well. Okay, this is the IRA, so no margin use here. So I've got this $1,700 that's immediately available. So 1,700 is actually perfect. I can buy another 100 shares of Cipher. And then, so I've just collected 1,700 in premium. And now I'm going to collect another few percent on top of the 1,700. So by continually reinvesting the profits, I'm turning this into like a, instead of an additive profit, this is turning into more of like a compound interest thing. So I'm just going to, like, I don't care about the miners. A lot of times I'll go to the expected move. But in this case, I'm just going to be a complete premium junkie. And so I put up 1,700 in collateral to buy the shares, and I collected what, 70 bucks. So that's about 4%. 4% return on this, guaranteed. That's if the price of Cipher stays the same. If Cipher drops to $8 a share, then I still get the 4% return on the capital, but of course I would lose 50% on the share price. So that worked out pretty perfectly. If all I had to spend was like $1,000, I'd have probably done this trade with CLSK instead. But that worked out nicely. Let's see. Cipher. Yeah, the 18.5 call. Could I roll this down for a credit? Sure. But I think I'll just stand by. Stand by to stand by. Well, actually, let's just see. Let's see what would happen if I roll the strikes down. 2. Yeah, I'll at least double my credit. So right now I'm collecting 21. If I roll it down and collect 28, that doubles it. I don't mind that. The only thing that I don't know is does they charge me for rolling? Usually an option contract costs you $1 at Tasty, so it doesn't cost anything to close it, but it usually costs $1 to open a new contract. So probably paid $1 for that, which is annoying. And to make $20, $1 divided by 20 is 5%. So I kind of paid 5% to roll that. So I should probably think about that in the future. That rolling for peanuts, if you're paying transaction fees, cuts into your profits. Mr. Meaner says, tell them I am not here. All right, so Cypher might get called away here. I sold the 15. That's well in the money. So we'll see. CLSK, same. Yep, same here, not ready to roll. Anything I need to do with strategy here? What do I even have? I didn't group these. So I'm not, oh, actually no, this is a vertical. I thought I grouped these. And what else do I got? These must be grouped, right? And these must be grouped. All right, that's Mobetta. Well, that doesn't make sense. I don't have a covered call against this position. Huh. All right, this is the put credit spread. I've got 5 covered calls against 5 longs. I've got 2 covered calls against 2 longs. All right. Same deal. Rolling. I just grouped those, and now I'm about to roll them and screw up the groupings. So that's super fun. What is this? 200, 220. Come on, I like fills. All right, same here. Let's roll. Damn it. Let's see, 250 plus 10 is 260, so I can roll this down to 260 potentially. Small credit there. All right, so these are all cleaned up for some credits. And somehow I forgot to sell a covered call here. Huh. All right. And let's just see. I mean, I do have a slightly positive theta here, but I don't know why that would be the case. So let me just go ahead and sell the expected move. There we go. So that gives me 2,600 to play with. And I can do the same thing. I can buy another 100 shares of Cypher. That's only a 50% margin requirement too. That's kind of nice. Let's check and see if the market was closed. I'm not getting fills here. Am I chasing the price? Okay. So, turning around and selling another covered call. The cool part about adding these shares, I'm kind of dollar cost averaging. That actually brought my trade price up a little bit. So now getting called away at 15 is kind of like a break even. Doesn't really matter, but it matters to some people. So now I'm going to go ahead and sell. I'm just going to pretty aggressively sell right at the money. Collect another 60 bucks. $1,000 to spend. This is going to work out perfectly. How much? 1,063. I can't quite get. Let's see if I sell. If I sell the 11.5, that's going to give me 11.13. That's not quite enough. I'd be using margin in that case. You know what? I don't need this vertical. I don't need this vertical in my life. Probably going to break even on it. It's not a big deal. Okay, that should release some collateral. There we go. Oh. Okay, that didn't do what I expected. All right, I'll just hold on to this. I think it must not have been counting the entire credit spread against me. Alrighty. Nothing to do but sit and wait, sit and wait, sit and wait, wait. This one maybe is IBIT down. IBIT 61. I could roll this out to 52 to the 61 strike. That would give me 80. Sure, why not? I'm saying 61 because it's the 55 strike and it's worth about $6. So let's do 0.44. All right. Added like $40 there. These will probably die a painful death. Man, my 300, 350. Yeah, let me roll this. What, to like 310? .7776. Really? Let me let that marinate real quick. Maybe not. .76. What did I just put it in for? 75, 75, 4. 74 would I put it in for originally. Killing me, Smalls. There we go. Okay. So let's refresh this. That should be the last tweak. And that gives me $300 worth of buying power. Can't really do much with that. So, I mean, I could buy a share of strategy, I suppose. All right, I think we're clear. Bitcoin for Business says, "Hey, can you explain a little more what you're doing or trying to accomplish here?" Yeah, sorry, I just assume I've been saying the same shit over and over so many days that everybody knows what the hell I'm talking about. So the general idea on all of these positions is to set up an option selling portfolio with a positive theta. Theta means that I sell an option and then over time it becomes less valuable, which means I can buy it back for cheaper later. This is a limited upside play, meaning I can only make small amounts of money every time I sell one of these options. And the buyer on the other end of that position is hoping that he captures a bunch of the upside. So I'm willing to sell on a short-term basis options against my collateral position. And I repeat that procedure week to week to week to week and aggregate those small profits into a meaningful number. There's a couple of different ways you can make money in the stock market. You can make small profits many, many times over, like what I'm trying to do, or you can make large profits and only make maybe a handful of few trades. And the only thing that really matters is that the money that you're making outweighs the money that you are losing on your losing trades, and your portfolio will go up over time. And so really today, I don't have to be in here tweaking every single one of these positions, but I record a video every day, so I got to talk about something. But you could totally do this once a week, once a month. You don't have to be in here tweaking every little strike and every little expiration date. But in general, if you sell a position for a certain amount of money, and if that amount of money decays in value enough that it's small enough to not even be holding on to it any longer, I will either close that position for a profit early, or roll it to a new expiration and or strike for a larger credit. In this scenario, instead of the price going down, as I would expect, the price of the underlying had gone up, which means I can't buy it back for cheaper as I would prefer. And I have to make a decision about whether I will actually let the buyer of this option end up buying my shares for $10.50 a share, which is, well below the current share price. That's called getting called away. The buyer would exercise that option and basically steal my shares away from me at the agreed upon price. So these are the little decisions that I'm making as I scroll. Does this position have enough value in it to leave it alone and allow the decay to continue so that I can buy it back cheaper? Or, do I just want to exit this position entirely? That's kind of the overall mechanics here. So I hope that explained it. I've got 519 episodes of the same shit day after day. Hopefully this will be a record of, for posterity, like, okay, 2024, you can look at every single trade that I made, what went right. We can review 2025 and review every single trade and see what went right and what seemed to go wrong quite a bit, which was the price of everything that I owned went down. And yeah, hopefully this is a contribution to the internet. Cool, man. All right, we're all caught up on the chats. All the trades are done. And so I appreciate everybody for tuning in. Be good.